Hi there, friend. My name's Pam Pryor, and I help business owners better leverage their existing cash flow so they can become more profitable, pay down their debt, and grow faster. That's what it all comes down to for entrepreneurs. A little bit of background: I've been a $1 billion company CFO and controller for 25 years, maybe a couple more, but I've learned all of the nuances that big companies deploy to maximize their cash flow and grow as quickly as possible. And my mission now is to bring that to entrepreneurs in a way that doesn't burden them, but gives them the clarity and the visibility into their cash flow to be able to grow profitably and make good, solid business decisions. So, a lot of my clients come to me because they feel like they're making money, but they don't have any cash to show for it. They've been profitable, they've had a good year, and they get to the end of the year, and all of a sudden their bank account balance is not what they expect it to be. And there are a whole bunch of things in that problem that we're really able to fix because it leads to, for these clients and these prospective clients and a ton of entrepreneurs out there, real uncertainty, lack of clarity. They work probably way harder than they need to because they're stressed about finances and whether or not the other shoe's going to drop any minute and they're going to run out of cash or stop making money. Um, and 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 living like that without that visibility into the cash flow is really a stressor that has so many implications, not just on the business, but on entrepreneurs personally and with their health as well. So there's one of the ways to cure this is to really dig into a couple of places that affect the timing in your cash flow. And the biggest place to focus on, the best and the quickest place to focus on, is accounts receivable. We need to find out where that leakage is occurring. Where's that disconnect between what you're seeing on your profit and loss statement and what's actually in your bank account? Why the heck can't you predict what the balance is going to be in your checking account? And the place that I really want to dig in here is accounts receivable, because there are some very obvious things you can do around accounts receivable, but there's a really neat fourth point I'm going to make today that you may not have thought of that I want to throw out there for you. And it's getting your hands on some cash that you may not otherwise have access to. So, first of all, what is accounts receivable? Accounts receivable is the money that our clients owe us at any given point in time. And probably the best way to manage this is, or to explain this, is to talk about clients. Most of mine will have payment programs available for their clients. So you can pay $5,000 now, or you can give me two payments of $3,000. So it allows your customers to pay over time so that they can kind of spread out the impact on their business. So one of the things you can always do, or one of the tools to have kind of in your war chest here, is to accelerate that. So if you have a whole bunch of clients on a pay plan and you happen to need a cash infusion, you can go out there with a real marketing play for them that benefits both of you and say, I'm looking to bring some additional cash into the business because I want to invest in improving my program more quickly than I was planning to, and therefore I will give you, X% off of what you owe me if you want to pay it all today. And that, of course, there's an expense to that, but we also know that in times of cash crunch, expenses are a little less important if they're related to getting money in the door faster. But the really exciting piece I want to talk to you about that you may not know about is that you can also, with AR, if you don't want to change your payment plan, if you don't want to accelerate getting that cash in the door, you can actually get small business loans against that accounts receivable. So a bank will see that you have clients that have paid you and that are going to pay you, and they'll lend you money you may not have thought you had access to. So, and it's not, but I'm not talking about, some of you may be thinking about factoring your accounts receivable, and I'm not talking about that at all. I'm talking about a good, low interest small business loan. And I've done this with a couple of my clients. So I had a client who was ready to really scale the business. This was a 7-figure client, and they were ready to put some serious money into scaling the business for a couple of reasons. One was to add some bricks and mortar, but the other was to actually hire staff ahead of the incoming revenue when the business was going to scale. Very common problem for folks. So this was a coaching business, and they had, it was, I can't remember the exact number, but I'm going to say it was about $350,000 of accounts receivables. $350,000 of accounts that people owed my client money for. Okay, so what we were able to do was call a bank, directly to a bank with a contact at that bank, and say, hey, here's the story. We have this 350, whatever it was, $1,000 of accounts receivable, and we'd like to borrow some money. And they were able to look at that and say, okay, we'll give you a $250,000 line of credit, and you have access to it, and the interest rate is X, Y, and Z. So it's the perfect world, right? They didn't have to borrow the cash right away and start paying interest. They just got access to a small business backed line of credit. And I just want to throw that out there as an option. If you do have high accounts receivable, you can actually go to a bank and borrow money based on that. Not factoring, not getting these super high percentage interest rate loans, but you can actually talk to a bank about what they can do to give you a line of credit when you have a lot of payment plans. So just wanted to throw this out there. This was what we did to resolve my client's problem, and it really helped her a ton. So just like in her case, the first place you should look if you've got cash flow issues is in that accounts receivable. How many people owe you money? How much is the total? When are they scheduled to pay you? And have some proof that similar clients have paid you on time in the past. And with all that information, you can walk into a bank and say, hey, I'd like to set up a loan or a line of credit using this AR as my asset. So I really hope that's a helpful tip. It's something that a lot of clients I've worked with have not thought of before. So I wanted to throw that out there for you. Hope you like watching this as much as I enjoyed making it. And again, if you know anyone else that might benefit from this, please feel free to share it with them. Take it easy. I'll talk to you soon.